Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He writes for the Financial Intelligence Report. He's speaking to us from the beautiful Bahamas. Welcome back to the show, David.
Yeah, thanks for having me.
David, what's the story with gold and Bitcoin?
Well, there's an interesting trade that was happening recently. There's a guy named Raul Paul who writes a pretty large a website, there's a lot of financial videos called Real Vision, and he basically, I'm sorry, it's very large. He's got a huge following. He did a trade recently where he said he was selling like basically everything, including his gold and precious metals, and putting some 98% of his money into Bitcoin. And then a few other guys I know that write newsletters like myself that do a lot with precious metals, told me that, they had subscribers telling them, like a month ago, people were selling all their junior stocks, all their mining stocks, and buying, cryptocurrencies and Bitcoin. So I think actually, there was actually a trade going on where people were just, because gold's been consolidating since the summer, were actually selling their precious metals and buying Bitcoin and other cryptocurrencies. And that kind of drove Bitcoin back up to the 2017 highs, and then also drove gold down, to below 1,800 an ounce at some point. So I think that trade is done with, and it looks like money is moving back into precious metals. And really, to me, just look at seasonally the charts, just looks like a consolidation going on in gold and precious metals. And we're kind of in this no man's land in terms of fiscal and monetary policy, because we're seeing this transition in the government, and because there's still some kind of fight going on about the election, which I still think, personally, I think Biden's going to win in the end. I don't see this going anywhere. And that's just what I think is going to happen. It's not with, not exactly, and that doesn't tell you what I think, there wasn't some kind of shenanigans going on, right? But anyhow, and because of that transition, you're not really hearing a lot of the talk about the future stimulus. And I think there's going to be a lot of it once Biden is confirmed. And it doesn't really even matter, in my opinion, if the Democrats don't get the Senate, because, Collins, who's the Republican senator from Maine, she's more kind of like middle of the road, and Romney as well. I think they will join the Democrats on any kind of plan for a big fiscal stimulus. So I think even if, it's 51-49 in the Senate for the Republicans, those two flip, it's 51-49 for the Democrats, and you'll get the big stimulus passed. And that also probably means more weakness for the dollar, bigger deficits, and probably higher gold prices. So, and I think that short-term trade, and one thing about that Bitcoin trade as well is Bitcoin going up and gold going down. I don't think that Bitcoin is quite competition for gold or this currency hedge like many people say. I think it's also a reflection of kind of the frothiness in the financial markets, right? So, that's what I believe as well, cause if you go look at Bitcoin back in 2017 or back what's going on now, it always seems to have these big surges and blow-offs, while the stock market is having a surge and blow-off, right? It doesn't seem to go counter to the market, sometimes like precious metals do. So, that's why I would be wary as well. No, I do think that ultimately cryptocurrencies will go higher with gold and precious metals as there's more devaluations, more printed money, etc. But I think this was kind of like a short-term phenomena, and this trade kind of blew off in terms of sentiment and the whatnot in the last few weeks. And it does look like gold is beginning to move higher again. It's at roughly $18.50 an ounce, up, roughly $100 from its lows, as we're doing this interview.
We'll have more with David Skarica right after this.
Value from success, growth, and discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with David Skarica. David, what do you think's going on with palladium and platinum? Why are they so hot?
I think what's going on with all these, it's not just, it's base metals, it's these, also like the rare earths. I think there's a combination of different factors. Number one, I think it's this anticipation that there is going to be a stimulus and infrastructure and the whatnot, and that will cause demand for base metals. And with the Democrats, like I said, taking power again, that means more investments in so-called green energies and the whatnot. And palladium, platinum are used in battery power. They're used in electric cars, as are cobalt and copper, which are also moving higher. So I think there's a combination of the green energy / stimulus play going on in all of those right now. Now, like, whether those are actually really green efficient is debatable, because of the input costs in terms of the amount of that stuff that needs to be mined and the amount of damage that does to the environment as well. But, some people would argue and actually I think a German university did a study on it, said that if every car went electric, it would probably burn more fossil fuels, getting this stuff out of the ground and more damage to the environment than just keeping at 80 to 90% of cars as gasoline running. So that's always up for debate. But I would say, regardless, politicians don't care if they're wrong, and usually they are. The perfect example is in Ontario, where I'm from originally, runs most of their power off green energy, off wind and solar, and now has the highest energy rates in North America after having the lowest, for decades and decades. So, but these politicians are blind to kind of, their set beliefs. So like I said, so what I'm trying to say is it doesn't matter. And I just think that, well, again, once the Democrats take it up, you're going to see a huge, demand for that.
Does that mean silver will jump dramatically because you need silver to make the mirrors for solar?
Yeah, there's actually an interesting article I read on Kitco which talked about that said that, again, for the batteries and for the green technology, silver is an industrial metal that you need. So silver should actually begin to move higher, not just as a monetary play, not just as, printed money, inflation play, but also as a green energy play as well.
Now, of course, all this solar talk, it might work in Arizona and California where it's sunny all the time. But right here in Vancouver, in the winter, we get like 3 and 4 weeks of solid rain at a time. I have a little solar palace out on my balcony, so many little solar powered things. They work for about an hour, then they blink out. Is that one of the big faults of trying to rely on alternative energy in a place like Canada?
Yeah, and then also, the Bahamas, I'm actually going to go solar, but it has nothing to do with green. It's just that you're talking about something being convenient and efficient. Well, in the Bahamas, we get a lot of sun, and on these islands, we have these crappy, diesel-powered power plants, which are really expensive, 40 to 50 cents a kilowatt hour. So with all the sun we get combined with how expensive energy here, it makes economic sense, right? So that's really why I'm doing it. I'm not doing it to save the world or something. You know, I'm doing it because here is one of the rare places where, you know, because energy is so expensive and you have solar, it makes sense, right? But like, what you're talking about is like, let's say you lived in a place where you're trying to live off wind power, but you didn't have wind for half the year. That would be the same kind of problem you could run into. So yeah, that's ultimately the problem, where in some places it just, you know, you need to run off natural gas or the whatnot, because you just don't have, you know, I guess the environment on your side, like in Vancouver, where yeah, from November to March, it is raining half the time and it's cloudy half the time. It's going to make much more economic sense to run after natural gas. And by the way, one reason, if you go look at the total output of greenhouse gases, one reason the U.S. is actually doing pretty well in terms of it falling is because they've switched a lot of coal and diesel power, powered production into natural gas, which is a much cleaner burning fuel. So it's like, to get to where we want to go, we just don't have to go purely green. And then also, ironically enough, probably the cleanest energy, unless you get a meltdown, is nuclear, which has no greenhouse emissions. But a lot of the greenies don't like it because nuclear doesn't have that political correct, you know, vibe that these other places have, you know?
We'll have more with David Skarica right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with David Skarica. David, on the first day of winter, the 21st, Tesla will be joining the S&P index. What do you expect the effect to be?
Well, I think it's already happened. All the index funds have kind of bought Tesla in anticipation of this. What's kind of interesting about it is because Tesla is so expensive and it's going to be one of the larger companies in terms of the weighting in it, it's going to move up the S&P's PDE ratio by 3 or 4 points. And the PDE ratio on the S&P is already near an all-time high. So just it being in there is going to make the S&P almost go back to the 2000 highs when you had all those big tech companies with almost no earnings inflating the PDE of the S&P. So that's kind of the interesting thing about Tesla, that it's going to make the market ultra expensive. And actually, another interesting indicator to look at here is right now the stock market market cap to GDP, the Warren Buffett indicator, as it's called, which basically, like I said, it is what it, what I just said. It's the total size of the economy compared to the total size of the stock market, and the all-time high was about 140 or 130 or 150% back in 2000, and it was only there for maybe 6 months during the top of that bubble in the tech stocks. It's now at 180%. Nosebleed above anything it's ever been above. So it's just unbelievable how expensive these stocks are. And it's really, and Tesla's going to make that, well, it's already part of it because that's the total capitalization, but, now it's going to increase the price to sales, the price to earnings on the S&P. Plus you got the market at these nosebleed levels. We really are in uncharted territory due to zero interest rates, due to all this printed money. I got a feeling it's going to end very, very badly. But with all the stimulus coming down the pipeline, I don't know if it will end overnight. But I think this is a real warning to individuals right now.
I was just going to ask about, with the Dow, it seems hitting a new record every day or every second day. Is this going to continue, and how long can it continue?
Yeah, I don't know. To be honest with you, like, I don't know. Is this a situation like the Nikkei in 1989, and it peaks out right at the end of the year? Or is it like 2000 where it goes into March? Is it like 1987 or 1929 when it goes into next year, into the summer? I don't know, but I do think that once this stimulus is announced by the new government in the United States, you might get kind of the final blow off, combined with the hopes that, you know, because of a vaccine, that the economy kind of returns to normal. And then what happens is the government is then so far in debt that people start to deal with those problems. And with, you know, after this next stimulus, they can't really do anything else, because just like I said, that market cap to GDP is stretched. The debt to GDP is going to be at some nosebleed level. And I just think that we're kind of nearing the end of the line, for all of this. And at some point, the market will have to fall to kind of, reflect that. So the only thing is they're throwing so much, you really are throwing everything at it right now. And, you know, the kitchen sink, I guess, as they say. It's just going to be really difficult to know when exactly this is going to end, but I just think we're kind of getting, you know, into the end game. And we're seeing that psychologically, you know, the millennials now are all pouring into the market. You know, I saw a few instances, that was kind of laughed at, where Lana Rose, she's a famous porn star. She was promoting, like, you know, signing up on an account and day trading. And when you see stuff like that, you kind of think, you know, we're kind of nearing, you know, this kind of bubble frothy, you know, end game in the market. But the problem is, with all the liquidity out there and with more stimulus to come, when does it end? You know, does it end next year? Does it end in 2022? Who really knows? But I'm just going to tell you, you got to keep hedging. Like with myself, I buy some put options every year, you know, buy some bear ETFs, even if it's just a small percentage of my portfolio, to protect against the potential of a kind of cascading market decline. Remember, a lot of these millennials, they've only come in after the lockdown started, after the market tanked in March, April of last year, or of this year, and they don't know anything but this rising market for the last 8 months. So once that market turns around, and they're, you know, the millennials are all, you know, piled into Apple and Amazon and Netflix and all of the big thing, the big, you know, the big kind of tech stocks, you know.
The FANGs.
Yeah, the FANGs. But not even the FANGs. Like, there's stocks like SD, which sells clothes online, Zoom, you know, because of the Zoom interviews. These things have all benefited from lockdowns. So they're kind of like into all these kind of technology stocks as well.
What's the story going to be for them? Because they've done nothing but ignore gold through all of this. Well,
I think, okay, so just so you know, here's what I think on both fronts, because they're in these stocks that have benefited from that, and because the millennials are kind of tech savvy because they're young people. Look at, I'm a Gen X guy, right? And I was in my early 20s when the 2000 bubble happened, and it was our generation that was really enthralled with the internet, because we were the first guys who could really make money off it, who were really growing up with it, et cetera, right? So they're kind of the same way with all these kind of new technologies, like, you know, like now being kind of an old fart, you know, there's no way I would ever use anything like, I don't like TikTok, right? I think that's a bunch of nonsense. But, you know, the millennials would use, would use something like that. And then if the TikTok ever had a trading company, they'd probably buy it on the market. Same thing with Zoom, same thing with all these, you know, like Facebook obviously owns Instagram, et cetera, right? So they'll buy these things. So I think that at some point, those valuations will get stretched so far that they will decline. But I don't know if the millennials will just like, okay, the market goes down, they lose the money, they see these stocks go down for the first time. They'll probably actually, especially if they are attracted when you're younger, you're attracted to more volatile, aggressive investments. Probably the junior mining sector will suit them. You know, like cryptocurrency, like marijuana stocks, like some of these tech stocks. If gold is the only thing kind of going up after some sort of bust, it will be like, that'll be attracted to them because there's potential for big capital gains. So I think, yeah, you could see a shift in the retail investor and the younger retail investor from these kind of momentum FANG / technology, COVID stocks, whatever you want to call them, into the gold and precious metals market, especially because the gold and precious metals market has this junior arena where the volatility is there and the potential for capital gains is there. You know,
David, what do you think will be the hot trend of the new year?
Oh, I actually think, I don't want to sound like a one-minded guy on gold or something, but I do think that once Biden is confirmed in about a week's time, and then, once the new Congress and Senate meet, and once that probably some kind of huge, I would think it's going to be in the 2 to 3 trillion range, stimulus is announced, that the gold and precious metal stocks will really begin to take off. And it could just beat all inflation assets. Like you talked about platinum and palladium earlier. Copper is doing well. Maybe continuation in the rally in oil and gas. And we're seeing the U.S. dollar really falling precipitously. So maybe it will just be this kind of continuation of this stagflationary trend. And to me, what's going on globally, I know all countries are rolling up huge amounts of debt, but to see the reserve currency doing it, the last time we saw this in the reserve currency was after World War I, when the UK had kind of an outsized debt to GDP, compared to the rest of the developed world, but the world was willing to support it because the UK, was the reserve currency, at the time, you know. So I think that's happening in the U.S. dollar, but as the UK took on all that debt, also the pound was devalued, and I think you will see the U.S. dollar continue to be devalued, as well. And I think the election too plays a part in that, because even though Biden wins, I think the kind of banana republic type, tendencies that have been exerted from this election on their political system is psychologically taking an effect on their economy, et cetera, and on their currency. So I think this kind of stagflationary, trend could continue in the new year.
David, thank you so much for chatting with us.
Yeah, thanks for having me.
My guest has been David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He writes for the Financial Intelligence Report. If you have any questions for David or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.